Let's go to Canberra now. As mentioned, Matt Comyn, the CEO of the Commonwealth Bank, is before the House Economics Committee. He has just started giving evidence, if you like. He's there for 3 hours being questioned by MPs. So let's listen in.
Working families. Younger Australians, who tend to have lower incomes and smaller savings buffers, are the most sensitive to these changes in prices. Those aged 35 to 44 have the highest share of mortgage balances and are most exposed to higher interest rates. In providing this support to customers, we have sought to engage them through their preferred channels, many through NetBank or the CommBank app, but others through more traditional channels like our contact centres and branches. We're proud to maintain Australia's largest branch network and more than twice as many ATMs as any other bank. CBA is committed to keeping all of our regional branches open until at least the end of 2026. Last financial year, we invested over $80 million to improve our branches and $800 million to operate our branch and ATM network. We also distribute around $4 billion in cash each month through our network and the country. Cash is important for many customers, and we're committed to ensuring a reliable and efficient distribution of cash to communities. As part of that commitment, you may have heard that the ABA, major banks and major retailers have reached an agreement with Armaguard to provide a 12-month financial contribution towards its cash in transit business. The agreement will see Armaguard receive approximately $50 million in additional financial assistance over the next 12 months, subject to meeting monthly key performance indicators and other conditions. Our branch and ATM network is also complemented by our partnership with Australia Post, which dates back more than a century and is in place until at least 2032. We will continue to constructively engage across industry and government to find a long-term, sustainable solution to maintain cash and physical services in communities. And while sustaining these services is important, these challenges have been brought about by rapid changes in the way customers engage with their bank and the way they pay for goods and services. Whatever means of payment is used, there is a cost involved, whether that be the physical cost of moving and counting cash or the investment required in building the new payments platform. Some of those costs are more visible to consumers than others, and some of those costs are more fairly distributed than others. Recently released research by Boston Consulting compares the direct and indirect cost of cash versus card payments in Australia. According to this research, cash payments cost merchants approximately 3.9% to accept, which is more than double the cost of card payments. Consumers do not expect to be surcharged for using cash, as the cost of cash is embedded in the cost of the goods or services. Yet they are frequently surcharged for using a debit or credit card. The RBA will shortly commence a review into these matters, and I welcome the focus on this important area. Payments technology moves quickly, and it is critical that the regulatory environment moves with it. Some legislation governing payments has been untouched for 30 years. To this end, it is also critical that Australia passes amendments to the Payment System Regulation Act, which will allow the RBA to adequately monitor the payments ecosystem and intervene where needed. These changes are currently before Parliament, and I hope that all parties will work together to ensure that this critical legislation is passed as soon as possible. Finally, in an increasingly digital environment, keeping our customers and the broader community safe from fraud, scams, cyber threats and financial crime is a significant priority for the entire banking industry. Criminal activity focused in these areas has escalated since COVID. Last financial year, we spent more than $800 million to prevent, detect and disrupt these crimes. We have over 4,000 people working full-time across these areas, and it is now one of the largest areas of operational activity within the Commonwealth Bank. We were able to cut scam losses.
Okay, that's where we leave Matt Comyn for the moment. He is there for 3 hours. He's preempting where a lot of the discussion will go today. That is on cash payments, also looking after customers. He'll be asked about inflation, where he thinks inflation is headed and therefore interest rates and what the bank is doing.